Well, now Powell's actually been handed a bunch of subpoenas, and there's a lot of internal conflict going on there. So what's that going to look like? Is Powell going to throw in the towel and be like, enough's enough, and hand the resignation in? I mean, that's going to be big news, and it's going to be volatility causing news as well. The markets like Fed Chair Powell. Doesn't matter about your personal preference, the markets do like him. And so if he throws in the towel, it's going to be a real thing about who we get next, and how far politically favored they are. So if we get someone who's real Republican, that's going to be, very bullish. Trump may not be incredibly bullish the markets, but will still be more bullish the dollar than not. You got to remember, guys. Good afternoon, ladies and gentlemen, and welcome to this afternoon's Markets Now Market Report Breakdown session. Hope you're all doing amazingly well out there and enjoyed a nice couple of days away. Ready to get kicking off this week with the highlight of the week being tomorrow afternoon's CPI session, where hopefully we're going to get some of that volatility that we so deserved on last Friday's non-farm payroll. That's what I'm hoping anyway. Good afternoon to you guys. Good to see you. Hello there, Core Tim. Good afternoon, buddy. Hey, Jack. See Jack in the room. We got Scotty D out there. H&C, Kai. Hello there, guys. Good to see you all. Hey, James. Great to see you, team. How are you all getting on? Did you have a good weekend? Good? Yeah, decent? Excellent stuff. That's what I like to hear. So, as I mentioned at the beginning of the session today, we've got a big one this week. We have, of course, got the US CPI event this Tuesday. We've got the full rack of inflation data, both core inflation rates, monthly and annual, and the base inflation rates over the month and for the annual figures. I'm going to be digging into that tomorrow. Of course, we're holding a full live CPI trading event here at the UTC, which you are all absolutely welcome to. Obviously, it's right bang in the middle of the day, so if you can't make it, then that's absolutely fine, understandable. You can get it on catch up. But if you have got an hour to spare, try and make it. It should be, hopefully, a good bit of fun. After last week's failed NFP attempt in trying to find some excitement in volatility, I'm hoping that this CPI event will be where that takes place. And then later on in the week, we have PPI. Now, of course, we are going to be breaking these down in the market report this week, which, we have the first market report of 2026. So that's out. That's ready to go. If you guys haven't downloaded that one yet, then please feel free to do so. To those of you out there on the YouTube side of things as well, when you catch this, please feel free to join into the community where you will be able to download your own copy of the market report entirely for free. That's right, is free. I have made a slight change. As you will notice, the first page is missing, but I'm not actually going to include that anymore. I've had, how do I say this? I've had a personal kind of, I don't know, not an epiphany. I had a sort of a personal realization about the page one of the market report that I didn't like it. Frankly, I didn't like doing it last year either, but it was kind of already ingrained, so I continued. But I don't want the first page of the market report to put anyone off or, make anyone feel bad, because that's not the intention of it. Of course it's not. I would never ever intend to do something like that. But I feel like it might do. No one's come to me about this, by the way. None of you have. This doesn't come from a user experience perspective or polls that I've sent out and asked for feedback on. I just simply feel like sending out updates about how the portfolio is doing and the performance of it and some stuff like that it could potentially be a little bit of a hindrance rather than a motivational thing, which is what it was intended to do. So I've decided this year to cut that one out. We're just going to focus on what really matters for you guys, which is, of course, a weekly scan across all 4 trading assets and asset classes. And of course, the real important stuff, which is the economic impact scale, market challenges, and to give you guys those kind of market insights that you can utilize to actually make money. So all of the good stuff is still in there. Obviously, the stuff that is slightly less relevant has been taken out. Hope you will understand, at the very least, why that's been done. So, market analysis and economic impact report this week. US 30 Dow Jones, the Aussie CAD, natural gas, and gold getting us off the ground. We've got the US 30 Dow, which is currently stuck in what seems like a baby range. We're right at the beginning of it. It could break free, and this might not even turn into a range as of yet. But it does look like it's stuck in a bit of a fresh range at the moment. We're yet to see where the day's going to end up. It might come up to the previous highs and reject. It might come back down first. But we do have some pretty solid trading margins to work with within this range at the moment. So I'm looking forward to getting stuck into that this afternoon, and also thinking about where the CPI could lead us tomorrow within these trading margins. Next up, we've got the Aussie CAD. We've got two potential areas where we could see price pull back to before getting the continuation that we're after, back up to the previous highs. It may come down to the lower liquidity point. It could come back down to retest the break of structure point, which would be good enough for us because, of course, we're looking at these on a 4-hour time frame, but looking to actively trade them, of course, on a 15-minute time frame. So we're still going to have plenty of trading margin of availability for us to get our teeth stuck into there. Obviously, I've got a more descriptive outline written underneath, so you guys can go and check that out as and when you can. Moving down into the regions of energy markets, we've got natural gas this week, which unfortunately, guys, we were looking really, really good Monday through Friday. Late Friday, we started getting a big sell-off. It broke structure really nicely, but unfortunately, of course, we're not there for it, and that's the little bit. That's the bit of a frustration, to be honest, because I was really hoping natural gas would be able to sit tight up at around those upper levels at 385 area before getting the sell-off. But unfortunately, it hasn't actually gone that way. So what we need to see now is a retracement back up to retest that point of liquidity that's outlined in the chart there and get the continuation, which would be fantastic. The alternate view, which I haven't actually outlined in the chart, but we do have the possibility of taking a break of structured trade below the most recent low. So the market pulls back, it comes back down, it breaks the structure of the low. We could get a decent trade idea off in between those margins. So we're kind of looking at, let me zoom in here for you guys. We're probably looking at a trade between this area in here and then down to that target profit there with the stop losses up at around there. I mean, we're still looking definitely at maybe a 1 to 3.5. If we manage the trade out, obviously we're going to look at a higher X return. But right now, that's looking pretty good for us. And then over to gold, of course. On the other side, in our precious metals, absolutely extraordinary start to the week, guys. An extraordinary start to 2026. We had a price action pullback. We've had the continuation. It's been superb so far, reaching a high this morning of 46.02. It's incredible. And it also falls into line with what I was saying. I got some information, copy and pasted it to you inside the Traders Lounge regarding Powell's thoughts on the situation with Trump at the moment. There's an internal battle going on there. It's been brewing for a long period of time now. We've spoken about this throughout the duration of 2025, where there's been Trump said something, then gone back on it. He said something else, and then he's gone back on it. Well, now Powell's actually been handed a bunch of subpoenas, and there's a lot of internal conflict going on there. So what's that going to look like? Is Powell going to throw in the towel and be like, enough's enough, and hand the resignation in? I mean, that's going to be big news, and it's going to be volatility causing news as well. The markets like Fed Chair Powell. Doesn't matter about your personal preference. The markets do like him. And so if he throws in the towel, it's going to be a real It's going to be a real thing about who we get next and how far politically favored they are. So if we get someone who's real Republican, that's going to be, very bullish. Trump may not be incredibly bullish the markets, but will still be more bullish the dollar than not. You got to remember, guys, Republicans have historically been very intense capitalists. So if you break it up into, we're not getting into politics here, we're keeping an even view, but Republicans are capitalists and Democrats have historically preferred to save money. Republicans like to save money and sort of make loads of money. Democrats like to spend money and not be so sort of money driven, money focused. It doesn't matter what your personal views are. That is historically how the financial markets see Republicans versus Democrats. So if Powell goes out and we get a strong Republican sitting in the chair at the Fed Reserve, that could be detrimental to gold. It could be very, very bullish dollar, and so by which case we could see the gold commodity probably shaving off quite a bit of the gains that we've seen as of late over the course of the last couple of months, or vice versa. We could get someone very democratic at the head of the Fed, and we could see gold continue. We could see gold continue pushing 52, 55. Maybe by the end of 2026, we're looking at 57, 58. Which is not, to be honest, if we think about the last 6 months gains in gold, that is not unrealistic to say anymore. So very, very wild time out there with gold at the moment. Anyway, I've written a few bits and pieces down there for you to have a look at as well. But ultimately, it's a very interesting time to be looking at the study of precious metals and especially gold's safe haven relationship to the United States dollar. So as we move down then into market challenges this week, of course, I've already outlined the major ones. We've got inflation and we've got US PPI, which again is just a smaller inflationary metric. Lots and lots of volatility I would expect from tomorrow afternoon and leading into Wednesday as well. We could possibly still see a little bit of a backlash from the CPI release tomorrow, bleeding into the next trading session. Excuse me. Giving myself a pause to suck down my coffee. Nothing like a good brew. Right, so there is that. We've got US core inflation registering as a 5 out of 10 on the scale, on the algorithm. We've got core inflation annual data at a 9 out of 10. And this coincides with the base inflation registering as a 9 out of 10 as well. So these are two very, very big numbers here and would allude to the fact that we could be experiencing a pretty big shock to the system tomorrow afternoon. We don't want to put our money on this because it needs to fall in line with the technical parameters that we set out before us as well, of course. But just from looking at this, it could well be a big one tomorrow. Moving down to the SSV, not a great deal to mention here, apart from the fact that the VIX, our natural gas swings quite high and low anyway, so I'm not too concerned about that number. The only one to consider is the VIX, which is at 31.83% bought. I don't know if any of you guys have seen the VIX chart recently. It is crushed, which means volatility is at major, major lows. It's not just us, but it is the world that is feeling the lack of trading volume right now. There is something to contend with. Time of year. We are not looking at this number in mid-April. We are not looking at this number at the end of August, beginning of September. These peaks where volume is historically high, historically robust. We are at the beginning of the year. And even though it feels like we've been plowing through January at a relatively hastily speed, it is actually, guys, only the 12th. We're still at the beginning of the month at the moment. We haven't even reached the halfway point, and so it shouldn't come as that much of a surprise. The only reason I'm highlighting it here is please try to be patient with the markets, and that's enough said really right there. Just continue to be patient with the markets as they charge themselves up again. So moving down into the economic and order book impact report, we've got the economic impact scale. So this is the broader view version of this. This is the reaction to the trading assets above and those asset classes. This is the reaction to total market. Inflation rate, the base inflation rate is registered as a 10 out of 10. The biggest, the baddest number on the scale. Core inflation rate annual data is registering as a 9 up there as well, but a 10 out of 10 is big. So every single asset class affected by this metric that is predominantly US focused, or European focused for that matter, is probably going to get a sting in one direction or another tomorrow based on what the numbers are looking like, whether that's a beat on the numbers or a miss on the numbers. If, of course, the analyst's expectation of the figure comes out and it's absolutely correct, it would still indicate possible volatility, but you're probably not going to get that 10 out of 10 volatility. But according to this, it seems like something is in the mix here to see either a miss or a beat on the number and to get a relatively big volatility strike. Even the US PPI is registering as a 4 out of 10, and that's on the Wednesday. So it'd be really interesting to see where this one goes this week as well. Moving down, we've got FX market taking the brunt of the impact. 25% in equities, we've got 20% in indices, and we've got 5% in our commodities. So FX markets tomorrow probably going to be the most choppiest. But you know how we how we roll. I mean, usually we're going to be lining ourselves up with a couple of US indices. We'll be looking at the Euro USD. In terms of the commodities markets, we will be checking out gold. But apart from that, we're not going to be looking at any energy markets as a result of the sort of day trading from the CPI release tomorrow. And we'll leave it there. Nothing too notable to call out on the MFT, apart from the fact that indices are running at 59% bought at the moment. This is total commercial and non-commercial longs and shorts that have been registered under the data that I source for this metric. So that's a pretty big number. 59% over total commercial and non-commercials. That's a pretty big swing. So looking at quite bullish price action, I would say, over the indices. Remember, this is total liquidity that could be, locked in somewhere, pending limit orders, market order types. It's just total bullish liquidity that's ready to go or already in the market. So it doesn't necessarily mean that we should just go and load up right now instantaneously. It means that at some point these are going to rise over the period of time, maybe 1 to 2 weeks. Moving down into equities in focus, we've got a few decent bits and pieces. Do actually pay attention to the numbers. The numbers are there for a reason. And to be honest with you, none of them are looking exceptional. LOB is looking really good, and I would pay attention to that one. The rest I probably wouldn't. But also check out Kinsale. Kinsale at the moment looking good, really quite bullish. Lots of reasons to buy. It's a small cap, low cost, great for first time investors or sort of intermediate investors to check out, and it's available on many of your beginning trading platforms, investing platforms. So you can buy fractional shares. Like I say, it's real cheap. Take a look at it. And then we've got institutional buying interest by sector. Capital goods registering as the number 1 point this week. Cloud infrastructure, it's second place. Financials at 1.7 billion in third, and healthcare at 1.4, right down at the bottom there. Interesting. We've never seen capital goods at the moment. At 2.9 in first place. So that's an interesting one to get 2026 off with a bang. And we've got cloud infrastructure, which I don't believe we've seen in second place either. But there's lots and lots of cloud infrastructure companies that are getting a lot of investment at the moment, clearly. And there's a lot of those companies that you can go and check out and invest in at an affordable price right now today, which I'm going to leave down to you. I'm just giving you a heads up that there's a shitload of money going into them at the moment. So it's worth your attention. And that, ladies and gents, is the end of the market report breakdown. So any questions about the market report at all? Absolutely fine if not, of course. As I mentioned, to those of you inside and outside of the trading room, the report is ready for you to download inside whenever you are ready and raring to go with it. So that's fine. And if there are no further questions, then we can dig into the US Open this afternoon. No? No problem at all. That's fine. Okay, let's get going then. So we're currently at about not 7 minutes to 2. We've got the US 30 Dow Jones, the Nas 100 and the S&P in the firing lines today. Start from the top at the US 30 Dow. It's been a slow day today so far. In terms of our particular trading hours, it's actually been a big day if you consider the overnight hours. We opened up around here somewhere. Where was it? Sunday. Yeah, that candlestick right there. And then we sold off instantly all the way back down, eliminating Friday's gains. And this is the same kind of thing you can see on most of them. The US 30 Dow Jones actually knocked out even more than the gains that we had on Friday. S&P 500 very much the same as the Nas 100. So they do look like they've had some decent daily change, but actually, if you consider the hours starting from here, we've not really seen too much of anything. Now, my bias for the US 30 Dow Jones this week from the market reports perspective was to see a continuation potentially back down to around 48.80 and then get a big rally back up to 49.56. Looking at this here, beautiful break of structure area. We've got a break close and a retest of it currently taking place, which is all looking very, very good. And I think a continuation lower does make sense, so long as we're trading on the underside of this point of liquidity here. Now, if I just drag that right the way through there, and I also look at the very lowest point that we made on the wick, which is there, that's not a bad trading margin, actually, is it? So if we go down to the 1 minute time frame here, that is a sizable trading margin without a shadow of a doubt. So I'm thinking to myself here, I mean, this is definitely a cash pit. Okay, there is 100% money down at 49.07. How do I know that? Well, the market's told me. Market took a dip down here and instantly was shot the way back up. So there's a lot of selling protection going on at 49.07. I'm thinking to myself, if the market's going to go bearish today, this is probably going to make a pretty damn good place to have a target profit. We do, however, need to be aware of the TRF. The TRF sits at about this area here at 49.116, which means once we get into the market, we need to monitor the situation. Probably when it gets down to around 49.12, in and around this area, we may see a little bit of hesitation, might see a bit of a bounce back. We can monitor the situation in real time anyway and make a decision on whether or not we want to keep this trade open or, well, the latter. We're gonna let it go. We're gonna carry on. But I think we're trading. This is a big liquidity point up on the anchor chart. It's not the major point of inflection, but it's a really nice area where the market's come back to retest. Perfect opportunity for a continuation based on the fact that we do get a bearish breakout today. So a trading opportunity initiated around there with the target profit down at the low and a stop loss. I want to have my stop loss about here. So long as I can beat that high there and this high in here, I'm happy. Definitely not looking for this one up here because that's going to change the bias. So a 1 to 2.75 is going to make me a happy guy for a Monday. I've already done well this morning in the European indices, by the way. We didn't actually review them, of course, but the EU 50 and the DAX performed beautifully this morning. Both of the potential trade ideas, the trading opportunities that were sent out hit TP, and the entries and everything about them were really simple. It was really, really good. The only negative I have about it is I've got a little bit of a bad feel on the DAX, which removed 0.4 of my risk reward ratio. So I only ended up with a 1 to 2.3 instead of a 1 to 2.7. But apart from that, it was good. It was good stuff this morning. So that's going to be the Dow Jones for the short. The break of structure for the long is actually pretty simple as well. We're going to try and get the break of structure above this area in here. And we do have a pretty hefty TRF team. There's no way to get around that. It is a pretty hefty TRF there. But I wouldn't be looking for that as the TP. I'd actually be looking at the level above. Sorry, as the target profit for this one. So that would be about there. I think everyone can see why. Certainly from this area of price action here, it's a really nice big level of liquidity. It's had a little bit of less respect in this area, but we're still utilizing it. The market's not exactly rejected it, but it's still utilizing it nicely. So we will then be looking at the long via the breakout there with a target profit at the highs and a stop loss, I would say, at around that level there for a 1 to 2.5. So not bad at all on the US 30 Dow Jones. Really nice area for the market to flex and breathe in here as well. We're limiting our chances of being wicked in. Not excessively. We could certainly still be wicked in on this, but it's got decent amount of room to breathe. So I'm happy enough with that. Moving down into the NAS 100. Let's check this one out on the anchor chart first of all. Okay, so really nice formation at the highs here. We've definitely got a commercial change of hands. Money's come up, money's being sold into, profit taking is taking place, so we've got the market dipping back down again. We've seen this multiple times as well in recent history, which only fuels our bias. We've got the nice floor down here as well. Very nice floor. That's actually a really decent trading margin. I'm loving this at the moment. Of course, we're not going to be looking to seek out the entire move. That just doesn't make sense when we're trading on a 1 minute time frame. So we're going to have to break this down. We've got two levels, one above, one below. We take this one. Let's have a look at that. So we've got the inflection point. This is the main inflection point within this move here. We've got multiple retests. We've got multiple retests. And then the continuation to the downside again. This is after the orders being built into the market here. Lots and lots of dollars being cashed in at this area. Then we get the big sell-off. On the way back up, we don't necessarily have too much of a reaction. We have a nice retest of the level before the continuation, but it is not the inflection point, or at least not at the current width. We may have to increase the width a little bit and put it about there. And then, of course, we can see that this area has been hit and the market's come back down in quite a dramatic fashion. So yeah, so that's there. The only thing is, of course, is we've now limited ourselves on the available margin for the long. So if we say to ourselves, this here is going to be the breaker structure for the long, we go down to a 1 minute time frame, we check out the available margins. The margins here, they're not that big. They're not that great. You can imagine this being done in a single 1 minute fashion. So let's say, for example, we take the trade as soon as we get a blip up above there, targeting 25.67. Stop loss probably going to be down at around this area here for a 1 to 2.5. It looks initially like a nice trade idea, and it probably could be at certain points in the day, but I'm not entirely sure we're going to get that. I'm not entirely sure we're going to get the fullest extent of this on the breakout this afternoon. I've just got a feeling. If the market goes long, I fear that by the time we can realistically get our order in the market after spreads and getting a decent fill and so on and so forth, we're probably going to be trading upwards of 25.64. It's going to eliminate the trade. I am going to leave it in there as the long because, frankly, team, the market otherwise is going to have to reach 25.70 before we can even trade. And that causes other problems. So I am going to leave this as the designated long for the NAS 100, but please do consider this one as a high risk opportunity. And not for any other reason other than spread, fill, bad fill at the time of opens and stuff like that. It's a very common thing. It happens. It happens commonly. Don't know what I was trying to say there. It happens frequently, and it's just something that we have to, it's just one of the expenses we have to pay doing business in the markets. What it does yield though is a nice opportunity to the lows down here, back into big liquidity at 25.53. So I'm just trying to think about sort of breaker structure areas like this one here. I think works really nicely. So we look at that area in there, for example. That's not bad. So then we would have this as the no man's land between these 2 points, and we would look to initiate the position at around 25.58. So let's go down here. We've got entry, we've got target, we've got stop loss. Arguably, I'd have this a little touch higher, maybe at around a 1 to 2.6, maybe 1 to 2.65, something like that. Yeah, 1 to 2.65-ish. Something like that would be really nice, I think. So that would be the NAS 100. And then to finish off the trio, the standard and poor's 15-minute time frame looks slightly more like it's in a 15-minute channel. So let's just channel it and see where we're at. So that's approximately what we're looking at. It doesn't have any kind of confirmation of the channel at all anywhere further back than this area past here. So basically that is the 15-minute channel. It's not great. There's no doubt about it. The fact of the matter is we've got higher highs and higher lows being formed. We cannot discount that. That is, it's there, so we have to utilize that. We have the potential for the breaker structure point there. And we have the target profit, which is going to be the median, which perfectly coincides with the previous point of liquidity, which is about there. So then our long opportunity with the S&P is going to look like this. So that's the long. And we do not have the availability for a short. I'm not doing the short because the breaker structure point is at 69.29. The target profit is 69.18. The margin's not available for it. And even if we were taking it down to the previous lows, it's still not a wide enough margin. So we've only got the availability for a long in the S&P 500 today. So on reflection, we've got a relatively decent long in the S&P 500. We've got a relatively decent long and short in the NAS 100. And we have the pinnacle of the three, the US 30 Dow Jones, which has the best availability and trading margins of any of the trade ideas. The only downside to the US 30 Dow Jones is the fact that we have a TRF sat right at the 50% point of the trade on both the long and the short. Excuse me. So in reflection, it's not a completely straightforward day. It's not a completely clear-cut day. Every single one of them has something that's a little bit of a nuisance. The NAS 100 is trading margins. The S&P 500 is trading margins in the fact we only have one side availability. The US 30 Dow Jones is the fact that we have TRFs sat at the 50% points of each trade. So not any singular one of them is a clear-cut winner. We're just going to have to do what we can. I know, Kai, you'll be thinking about what my level of prioritization is, as you have done previously, sir. But unfortunately, that is the best I can do today. No, that's fine. And I like to give it. I do like to provide a prioritization level for you. But as it stands today, we're all in the same boat here. I really, honestly, I'm not sure. I can't make my mind up. What I will be doing, I can tell you this, is I will have a multi-chart setup. And I will be scanning all of them, and I will be looking at them in real time as and when to figure out which one looks best. I think the S&P long, if the markets break out long today, I think the S&P 500 is a really, really nice long. I really do. I think it makes sense. There's a really nice clear margin up to the trend medium that we're in at the moment. And it's a decent stop loss. It's yielding a 1 to 2.76. I think that is a really nice long. So what I would potentially do is just internalize and say S&P is the long. So I don't care about the longs on the other two. If the market goes long, the S&P is the one that I'm bagging. If it's a short, I might, just on reflection here, guys, right in front of you, I might be able to actually offer what you want. Because I'm thinking to myself here, if it's long, it's the S&P 500. If it's short, the only thing about the NAS, I'm just concerned about the NAS and its trading volume this afternoon. We've seen times where the market dips down like this in one candle, and then we're all left thinking, great. Or we end up taking the trade down at the lows and the market contracts and then we get stopped out and then it goes down to the target profit. So we have to be patient. We don't necessarily want to be in on the very first candlestick of the move. Sometimes it really does pay dividends to wait a few minutes whilst the markets do their churn and burn, gets rid of the retail liquidity, all trying to fire off their trades instantly, and then we can come in when the commercials come in to pick up the pieces. Think and act like a commercial player, and that's a skill. That's a skill. That's not, you can't have that as you can't receive that as just a knowledge transfer. That's a skill that you pick up over a period of time, unfortunately. But there's never been a better time to start. So yeah, as I mentioned, we'll have to wait and see where that one goes. The US 30 Dow Jones short definitely looks the best. It really does. But make no mistake, I am concerned about this level in here. The fact of the matter is, we've come down here multiple times now, and apart from this one wick where there is clearly cash in the market, but apart from that one wick, this level has defended the bulls, over and over and over again, evidenced by recent history. So I think if we get in the market there's probably a strong possibility of a turning point at this level that we potentially, will be on the wrong side of. Okay. All right, guys. Hey, good afternoon, James. Good to see you, buddy. We're just coming to the end now, but the whole thing has been recorded, so I will get that out to you guys ASAP, including all of the updated trading opportunities for this afternoon's US session. But is everyone okay? Everyone clear on what needs to be done? Yeah. Excellent. Excellent. Good stuff. All right then, team. Well, I'm going to leave you all there then. I wish you the very best for this afternoon's US trading session. It's been an absolute pleasure, as always, catching up with you today. Thanks for the nice busy turnout again, and the engagement and stuff. So yeah, good luck out there. Let me know if you need any help. Don't rush the process. Let the market bring the trade to you. Double check the spreads. Double check the fill that you're getting. Don't go and rush anything. And yeah, let's bring it home. So have a good one, guys. Take care, and I'll see you then. Thanks a lot. Bye-bye.